Just had a question from Sergey and Albert in the comments section. And Sergey was asking, why are we seeing bond yields falling, though risk appears to be on? This will also deal with your question as well, Albert. Now, this is an anomaly that we see from time to time. Now, just taking a look at the equity space, we can see here on the right-hand side that the equity markets are generally higher. We've seen strength in the commodity currencies, Aussie, New Zealand dollar, Canadian dollar, weakness in the Japanese yen, Swiss franc, and weakness in the US dollar. So it would appear that risk is on. However, there's a couple of things we've got to factor in. Look at the bond yields. Now, bond yields are now going against the equity market. So usually when we have a risk on market, we would see equity markets in the green, and we'd also see bond yields here in the green. But we see the bond yields are in the red, indicating a divergence between the equity market and the bond market. Now, this happened at the start of the year. Equity markets were going higher and higher, but the bond prices were also going higher, which yields were going lower. So that was a dichotomy, and eventually the bond market was seen to be correct. So there's a general saying that when the bond market and the equity market are in disagreement, go to the bond market. So the bond market for me is a bit of a tell here. It's sort of saying that it's not getting carried away with this rise in the equity market. Now, why has the equity market been rallying? Now, there hasn't really been any particular reason for risk on sentiment that we've been seeing in the last few sessions. The general reason for the risk on sentiment is that there's lots of extra money from governments all over the world who are wanting to boost their coffers and really help their country and their company with support programs. So that's been some of the reason for the recovery in equity markets that we've seen. Although this is I would argue this is a short-term recovery, but we've seen upside in the equity markets, is the point I'm trying to make. However, see, the tricky thing is COVID-19 factors still remain. The big picture is it'll be a risk-off environment. That's the most likely outlook. So the equity market is being supported on the hopes of a massive support program. So this means this has been quite tricky to trade today. So today's positive sentiment, I say positive sentiment in inverted commas because I haven't changed the bias to a full risk on, because I'm not convinced that we are in a full risk on situation yet. And the bond yields going different directions to the equity market is one of the tells. It was this comment from Angela Merkel which really boosted the euro when she said, let me just find it, when she said there's no indication the response to the virus must be huge. So there was an uptick in the equity markets on that comment, and the hope is that, well, that's going to be fantastic news for the euro. But you can see we've seen some of that initial enthusiasm just beginning to fade now, because huge, what does it mean to be huge? What Germany considers huge may not be what Italy considers huge. So it's a little bit vague. It's certainly not clear. So that's why we maintained through the session our euro-US dollar downward bias. And you can see we're getting some strength in the dollar index. Now, the reason for that dollar weakness was that positive risk on sentiment. But that positive risk on sentiment wasn't a full risk on sentiment. So what's tricky now, the risk sentiment is mixed. That's why it's been quite confusing and difficult to trade today. And the market is in that kind of torn between the different stories. So we're sort of getting caught up a little bit in that story. But of course, look out for any comments from the EU summit, any indication that there is some more resources, bigger package than expected. Anything that's more optimistic will be supportive for the equity markets, and then we'd like to see some more dollar downside. But for now, we maintain the status quo. But as I said, I'm keeping a very careful eye on things here, and we'll update you when there is a definite change in risk sentiment. But as it stands, our euro US dollar and pound US dollar downside bias remain for the session.